Gold and silver have come under pressure in a broad-based asset sell-off. However, my returning guest this week on Gold Core TV, Patrick Karim of North Star Bad Charts, expects this to be short-lived before we see a sustained rally for precious metals. Stay tuned as Patrick brings us through the charts that are supporting his view. And remember, if you want to see more interviews with thought leaders and industry experts in financial markets, subscribe to Gold Core TV and hit the notification bell now. And if you want to learn more about how to buy, sell, and store physical gold and silver, log on to goldcore.com, your precious metals experts. Patrick Karim, welcome back to Gold Core TV.
Hi, Dave. Thanks you for having me back on there. I think it's been a little while there since the last time we talked.
It's been a bit too long. So I'm getting excited to dig into your charts and see what it is that you're seeing in the markets. Yeah. Obviously, since last time we spoke, a lot has happened, and particularly over the last couple of weeks, you could say a couple of months, volatility has increased dramatically. We're seeing massive sell-off across most asset markets, particularly stocks and bonds. And while we've got a very strong interest in gold and silver, we'll talk about that in a few minutes. But stocks and bonds are really, you could say, leading this liquidity crisis in assets. So I'd like to start and see if there's anything that you are seeing particularly about those two markets.
Yeah. Okay. So we could start with the bonds. Like in chart trading, the advantage is we know human emotions, fear, greed cycles, they repeat over and over. And right here, I have the 30-year yields divided by the 10-year. So the 30 and the 10-year yield ratio. And this is just like when these cycles, they're extremes. When the 30-year yield is too high versus the 10-year yield, there's a mean reversion. And then when it bottoms out. So the first step is just to see where those cycles have a tendency to bottom and top. And then over there, after that, if you want to get added value from that, you overlay an instrument that you're interested in. You want to say, okay, how does silver behave with this type of ratio? And you see that silver, here's a daily chart. I'm just going to zoom out a bit. When that ratio bottoms and expands, silver loves it. You see that here's the silver chart in the orange gold. Here's the black is the 30 divided by 10 years. So when that ratio starts expanding, that means the 30-year yields start outperforming the shorter term 10-year yields. Then silver loves that long-term type of inflation. But then when the expectations of long-term inflation are too high, market says, okay, maybe they're too high. Maybe then there's a reversion to mean. So silver loves tracking that. So it usually tops when that ratio tops, and silver usually bottoms when that ratio bottoms. And here's often, like recently, I've looked at March Madness, when everything started crashing, and I said, man, are we there? Is this what's going to happen? Another type of March event? But then this morning, I zoomed out just a little bit, and I looked at where that ratio was. We're right back here at the same levels we were back in 2018, just when gold did its bottom before it started rocking it up. This ratio, what's impressive is that it has fully reset. But look at that, the silver price and gold price are perched higher. They've done higher lows. It's like a lockstep. The ratio is, you can see it as fuel. It expands. The price of silver and gold, and even US equities, they expand with it. And then after that, as that ratio collapses, then it drags down the price of silver and gold. But they didn't do a full reset back. So now they're higher up. So the expectations are that once this ratio starts reverting back upwards, where the 30 years start outperforming the 10 years, it's probably going to lock in another low for silver. Wherever it crashes, right here, it started dropping. We could be in this like analog type of move. As soon as we get out of this small base and we start expanding back upwards in that ratio, it should drag up silver. Look, we could have another March Madness, another event a little further on. But overall, that trend for silver and gold was established way before March 2020. It started in late 2018, and I can't remember. Was that like the Powell pivot or something happened right back in late 2018? There, the markets weren't doing too good. And
Yes. As the Fed decided to pivot back, and it was the start of even more quantitative easing.
And look, we could be right back here. So even here on the daily chart, if I zoom in, and this could be it's constructive. It's not in free fall anymore. We're setting up a type of move that could cascade all the way back up. So we have to keep I'm keeping a close eye on that ratio. But historically, since it's, look, I'm even going to go on the monthly chart to show you how historically this is. Remove drawings. Here is how low it is. Or even back at, Jesus, we're so low.
Mm-hmm.
Look at that. 2000, 2005, that's when silver had and gold had this crazy explosion here. Back in 2018, these are hotspots. So when you see something like that, you're close to a either rising trend line or horizontal. These are spots where you know that the instrument that you want to play is close to a low. Doesn't mean, look here, it could even chop a little bit more, but you know you're not buying in fear of missing out. You know that you're not buying in like total excess. You know, when CNBC is going to tell you to start buying gold or silver, you're not even close to that yet. So this, for me, I see this as a fuel reset. And as soon as this thing starts turning back upwards, that could actually fuel. It's one of the macro drivers for silver and gold to help it fuel it upwards.
So when we see that thing turning upwards again, we're seeing higher long-term 30-year relative to the 10-year. Am I correct?
Exactly. Yeah.
Yeah. So what we might read into that is say what could possibly cause that, which is a further sell-off in the long end of the bond market, and then potentially, obviously less of a sell-off in the 10-year, or it could be a reduction of the 10-year yield. And you say, well, what could drive a reduction of the 10-year yield? Maybe that's either another pivot of the Fed where we see a bit more quantitative easing coming back in and the abandoning of quantitative tightening. I suppose there's a number of dynamics that could actually happen in order to drive this indicator back higher again. Is that right?
Yeah, it's one of those, right? Because remember, ratio, it's both, the ratio could go up and both those instruments could be going up, but like you said, one's going to go up faster, less fast than the other, or both those ratios, both those instruments and that ratio could be plummeting, and that ratio could still go up as long as one's plummeting less than the other.
So it's effectively it's a steepening of the yield curve between the 10-year and the 30-year, and that can happen in a number of different ways.
Yeah, I could to see which one moves which. Usually, what you could do is you just overlay the one that you're interested in. So let's say TNX, new price scale. Where is it? There it is. And you see when this was moving up, the 10 years were actually plummeting, right here, plummeting all the way down. And I could probably overlay the 30 years, and they're probably plummeting also, but they're probably plummeting at a TNY. They're probably plummeting at a TYX. They're probably plummeting at a less steep. I'm going to remove the silver chart. And where is, this is my, yeah, and here's the 30-year. See, they're both tracking pretty much the 30-year and the 10-year, right? It's just that one's gonna, so they're both going, they're gonna keep going up. It's just like you said, the 30-year, the long end is gonna rise faster than the short end. So it could still be like an inflationary period, but the 30-year will be, going up faster. Exactly. So it's gonna, the steep end of the curve, and the bond's gonna sell off more. And that's a good driver for gold and silver, that long-term expectation of higher yields.
Driven as well by this inflationary story that we're living through at this moment in time.
Look, they're breaking out. Look at that, Dave. Like these are long-term meaningful trends. Look, this is insane there. It's like this, You know what this is? This is people have too short of a memory, because this is what happened back in the 60s. We had the inflationary cycle. It was going up instead of down. Here, let's say if I put just the Fed fund rate, Fed fund. Look at that. We could be back here.
Yeah.
Look at the even. Oh, I had the TNX here that shows up. Okay, this is the Fed fund rate, which kind of they kind of adapt on the short end. Here is the TNX. The TNX was again that's a 10-year. So this could be happening all over again. We're in a new inflationary cycle, especially if this is sustained upwards. We could be just in a new cycle. Just people don't look. Practically all traders, they've only lived a disinflationary cycle. Even the old school traders, right, the one that trade in the 80s. This is what we've had for years. So this is very favorable for U.S. equities. But a paradigm shift in this going up, we're heading back into this type of environment there, where it's going to be going up. It's a change, and I'm not sure if folks are ready. So there is a case that this could get under control, right? Maybe, and it could take a longer term to bottom. So that's always a possibility where the Fed's gonna really get things under control. There'll be a pivot or yield curve control, right? That's another story we hear. I don't know how that's gonna work out, because in the 40s and 50s, it was flat for a long time. They did YCC, their yield curve control. So yeah, this is super scary, especially when you hear about the narrative that because the debt burden is so much higher today, right, than it was back then.
Absolutely.
Like the camel, the straw, right, that breaks the camel's back. Like, Jesus, what the hell's going to happen if these 10-year or 3-year rates go up above these levels, right? Like total implosion. Man, this is like, maybe this is going to happen also they're going to try to control that for years and years and years and years, that going sideways. Man, this is these type of charts, man, they really make you think about like what we're heading into, right? This is we're pretty much rock bottom. If inflation picks up, then growth stocks they're gonna get hurt. We'll see it here. This is the gold measured in SPX. Remove indicators. So look, this ratio kind of tells you where you should be putting your allocations of assets. The higher this is, that means gold is way overvalued versus SPX. And back in the 70s, 80s, on Barron's magazine, you heard death of U.S. equities. It's crazy, right? Today, like that's that type of news events you had back here, right? Man, the inflation's out of control, etc. But that was actually an extreme historically. And look where we are today. Now we're back at death. Gold is a rock. It's useless. You know, we're back at these levels, 2000s. These ratios.
We're back at the lows. The only way to go from here is up.
Look, of course, there's always the fear that this is going to keep going down, right? People say, but usually ratios, they tend to oscillate, especially these type of big macro. It's long-term cycles. There's a certain amount of capital, and it's just gonna. This is like your the funnel, right? It's gonna. Do I go this way or that way? Well, look, it's already starting to turn up. So even if gold, look, this thing is. I did a whole bunch of these charts on TA. So when this line breaks, or even here, you had a nice break, or even here, and I'm going to overlay. Which one? What do you want to see, the gold chart or silver?
Let's have a look at the gold chart.
Okay, put the gold chart right here. New price scale. And look at that. These are periods where I'm going to put a vertical line. These are periods where gold appreciates a lot. Right here, even here. See right what I broke out here? Beautiful cup and handle. What did gold do? Just rocketed it up. And that's what to expect right here. So there's probably going to be even a strong move for gold, all just to get to that breakout line. Once it closes above, then you know it's go time. So this is really impressive stuff. And even, okay, and this is the point that people don't often take a hold of is even while that ratio fully resets, just like I showed you, that 30 divided by 10, look where gold is. It's a higher low. It's a higher low. It's been tracking in your loss of purchasing power since the 1970s, and it's been refusing to do so. Even while, here it is, ratio fully reset here, ratio fully reset about here, ratio fully reset even here when you had that, we had that mini run, right, hitting that line. And look at that, it just did a little move up, fully reset. Look how higher gold is perched. This thing's going, man, by the looks of this, man, the next square could be like here somewhere, right? It looks like it's going exponential. Wow, I've never noticed that. That's pretty crazy stuff.
Seeing technical analysis here in real time.
Well, look, you can't see that picture. So gold doesn't track inflation. What are you talking about? It's been doing it perfectly. It's been, I'll show you the real chart that people say, the DXY. So here's the DXY. And the way you got to see the DXY is,
so the DXY is the dollar index chart, basically.
Yeah, it's the Euro USD. It's like I could overlay the Euro USD and it's like practically like the DXY. So you got to see that as US dollar strength because it's measured versus other currencies. It's been, look at high peaks, right? High peaks, but we know gold didn't do a crazy low here because people say, the DXY is up, gold should be crashing. DXY is super up. How come gold's not crashing? Like it's not back at, look, the last time gold was at this level in 2002, I think gold was like 200 or 300. Look, same level DXY. How come it's not crashing? Because the DXY is not the true macro driver of gold. It's the inflation adjusted PPIA. Is the inflation adjusted. So I'm going to use a producer price index, which is the input cost for like commodity people. It's not the CPI where there's hedonic adjustments. It's the actual cost of businesses, how much their input costs, their commodity costs are to operate, right? So this is a very accurate cost of inflation. And look at that ratio chart. You're going to be, look at that, those peaks in the 80s. Sure, the DXY was going up, but there was so much inflation that look, it's never done a higher low, a higher high. Look at that. This is your purchasing power, or for Americans, or look, I could put in GPD, it's the same, they all look alike. Since you've been unpegged from gold there, all these charts look practically the same. Your purchasing power has gone down, what, 90%, 100, like not 100, but it's like every 4 or 5 years, you lose like 50%. And check it, here's the kicker. I'll overlay gold and you'll see, look, you know what? I'm going to inverse that ratio. Don't be scared. And I'll put it back on log. Put gold on log. Look at that.
Wow.
That's what gold's been tracking.
Yeah.
Look at that. That's pretty much of course, look at that. That's what gold's been tracking. So no wonder gold's not crashing. There's so much inflation that even if the rates go up and let's say the euro, I don't know what they're doing in Europe, and they're still like they refuse to raise rates as much as the Americans. Of course, the US dollar is going to go up higher, right? Relatively speaking and that's the DXY. But gold, you don't adjust gold for inflation. Gold is by nature inflation adjusted. And this chart, like I've done this chart with the GPD divided by, let's say the Great British PPI. It looks just like that. Of course, there's periods. That's why you can't look at a daily chart, right? This stuff takes time, but usually gold leads. Look, gold crashed before the purchasing power started increasing, right? Because now I inversed it. I'm just gonna, sometimes it's messy there. So gold leads this. So the fact that gold's not crashing, it doesn't believe that your purchasing power, even if it's going up slightly via DXY strength versus the euro, it thinks that ultimately, where's my, that's what it thinks that's going to happen. I could even draw here, like there's a clear, there's maybe a breakdown line here. Maybe there's another clear breakdown here, maybe. And the horizontal breakdown line is the critical one. So I think all hell, like gold's really going to go crazy when this huge pattern here resolve downwards. That's when gold's going to do pretty good. So yeah, charts help visualize these behaviors where it's hard, because when you're on Twitter and you just look at the gold's getting smashed, the comics, conspiracy, we hear all these things, but they don't help you understand the macro. You need a 40, 50-year chart to see what the true behavior, the macro tidal flow. So there's this chart, there's the gold. I'll just back up just to show you.
And what's your prediction for time frame for this to unfold over?
Well, okay. So what I would do is I would take this line here. I'll just put XAU USD. Just go back on the gold chart, move indicators. I'll put it. I'm just going to try to find a meaningful pivot line. So a pivot line is a line that's touched the most from above and below. So this, you see that? It kind of removes the noise, right? You spend some time below, undervalued, above, overvalued, undervalued. But overall, this is the trend. So until this totally breaks down and you create another, look in the 70s, look at the acceleration was something
astronomical. Yeah.
Yeah, way more strong. So are we there? Is it going to pick up like the 70s? Or we're going to have this type of, because remember 2000 to 2011, 12 was a cyclical inflation cycle within a disinflation cycle that started in the 1980s, right? We saw in the TNX chart, like peak yields slowly going down. So it's kind of impressive that gold went that high in a disinflation cycle. So imagine what it's going to do if we really go in the inflation cycle where those TNX chart that, they stay above that historical breakout line. This is kind of the time frame. And look, it could go like that. There could be like people are going to, let's say there's a market crash, we're going to have a deflationary buzz, but from higher lows, right? It all depends like how these things fit, right? Where's there going to be the move? Then the Fed's going to start printing like crazy, like all the narratives, all the clickbait stuff. But overall, I'll show you our future. It's kind of scary. It's I keep track of fiat currencies expressed in a whole bunch of currencies, gold expressed in a whole bunch of currencies. So here's gold expressed in the ZAR. Forget the ZAR, what it is. It's
South African rand.
Yes, exactly. Look at that. Well, since 2003, because I don't have, look, the Turkish lira. Look at that. THB, is that Thai? The Thai baht. Yeah. Singapore dollar. Look at that. I think that one's pegged to the US dollar. SEK is Swedish krona. Look at that. Polish, the Poland. The
zloty.
You're good. You're good.
Ex-currency trader makes it easy.
Norwegian, right? The krone, another krone.
Yeah.
Mexican pesos. Japan. Look, Japan's crazy. Japan, INR is India ruble. Yeah. Let that load up. Our friends in India, guys. Yeah, your government does not have your best interests at heart. The huff.
So this is just the same. This is just the same story over and over again with all currencies, bar some of the major ones at the moment. But slowly, more and more are kind of joining the club.
Exactly. So the big countries, the big currencies, they kind of resist, right? They have, I don't know, more GPD or whatever offsets, inflation, right? A higher, more skilled, productive workforce will help offset inflation, right? But if you look overall, the trend is up. It's been up since 2000s. And if I would have had data since the 1970s, I have inflation from a whole bunch of different countries. And globalization hasn't started today because of the internet. In the 70s, when there was inflation in the US, there was inflation everywhere. It was worldwide. Like people, I don't know, even if maybe they weren't trading cattle or soy, or maybe they were doing current, they were probably, everything's linked. It's been linked forever, the whole country. And look at that. So all these countries, look, the Australian dollar, what a mess. Jesus. That's what's happening over and over again. I'll show you the inflation rates for the Japan, the country that's not supposed to have inflation is having inflation. What do you make of that?
Yeah.
What do you make of that? If that country has inflation, we have a serious problem. Like
they haven't had inflation in decades.
Yeah, but they have, but look at the peak they had. in the 70s.
Yeah.
Here's the Deutsch, our German inflation rate is just through the roof. And these are nominal inflation rates. Russia, I'll just look, this is Russian inflation rate. Look at this, Argentina, US is at 8.5. Not far off Argentina. They used to be the laughing stock of inflation. We're like just a few points below them. It's crazy times.
So these are all just that they're kind of telegraphing what's to come in some of the
Yes.
larger economies, is what you're saying. You're seeing all of these. You're seeing all of these moves. You're seeing this high inflation across the board. You're seeing high inflation outside of the major economies and starting to creep into some of the major economies as well. We've got it in there. We've got huge inflation in the US. We've got inflation in the UK. We've got inflation. Inflation in the UK is expected to hit 10% by the end of this year. In the Eurozone, we're at 7.5% already. So we've got strong inflation across the board. But what you're seeing is you're seeing the currencies in some of the major economies, like Japan, like Australia, starting to react against gold. And we're seeing gold move higher in those as gold is adjusting for inflation, which is embedded in those currencies. And what you're saying is that we're potentially going to see that next now in the major economies. And one of the things that's going to signal that is potentially is this ratio that you're looking at, the 10-year, 30-year ratio. And when we see an uptick of that, for whatever that might be, for whatever reason that might be, that will probably something that will signal a move in the dollar price of gold. Because again, we tend to get blinkered when we're looking at gold and we look at the dollar price of gold, or we look at the sterling price of gold or the euro price of gold in the major economies, and we can say, why isn't gold doing anything? Do something. And it's not doing anything, but it's doing something in all of the other currencies.
Yes.
It's playing the role that it's meant to play as an inflation hedge against uncertainty. You say, well, it's doing that in the yen, it's doing that in the Aussie, it's doing that in the Hungarian, it's doing that in South African rand, it's doing that in the Argentinian peso, it's doing that in the Mexican peso, it's doing that in all of these currencies. So it is playing its role. It just doesn't all move in the same way all at once.
Exactly. We got to remember the US dollar, and I know because my father's Lebanese, and when I went to Lebanon, I kind of saw it, is for other countries, well, maybe not the major countries, but for all the other countries on the planet, the US dollar is as good as gold. Sometimes as gold bugs, you're like, oh, what? Yes, except on the US, because they have the reserve currency, it's as good as gold. So the Lebanese people, of course, they own gold, but everything now, it's black market. Their fiat currencies, like their Lebanese pound, is getting devalued to like it's ridiculous. So they're just the whole country now is US dollars. It's like
it's
US dollars.
Hard currency. You know,
Yes.
they want to deal in hard currency.
So they have that, the US dollar, that's for them, it's their gold. But then when you see the US dollar depreciate versus gold, and now all these other countries using the US dollar as their currency, Jesus, now it's game over for everybody, right? You have to go to gold. When that gold chart breaks out on the upside there for that gold chart for the USA, it's game over for the whole planet. It's going to drag down everybody. That means everybody's going to be you'll have to go to gold. Like you won't have an escape, right?
Yeah.
Wow,
fascinating.
Crazy. It's kind of scary, but
absolutely, you know, indeed. But at least if we look at this, using technical analysis, using the charts is a way of cutting through an awful lot, as you say, of the emotion, an awful lot of the noise that's in the market. And it's always fascinating to get your perspective on it. And those charts that you showed us today are unique from my point of view and what I've seen lately, and you're really looking at things with a fairly unique perspective. So thank you very much for that. But before we wrap up here, maybe what you might do is just remind everybody where they can find out more about what it is that you offer and where it is that you hang out online, what your Twitter handle is.
Yeah, so guys, go check out on the on the Bad Charts One on Twitter, guys. I post a whole bunch of stuff there, macro stuff, keep everybody up to date in all this economic mayhem. And I have a website I do with Kevin Wadsworth it's called northstarbatcharts.com. So if you want more in hand, more actionable charts there, it's all on northstarbatcharts.com, guys.
Perfect. So what I'll do is I'll put those two in the description here, the show notes below this video. And anybody that's interested, I highly recommend that you check out Patrick's stuff. But for now, Patrick Green, thanks for joining us on Goldcore TV.
Thank you, man.
Thanks for watching. And remember, if you want to see more interviews with thought leaders and industry experts in financial markets, subscribe to Goldcore TV and hit the notification bell now. And if you want to learn more about how to buy, sell, and store physical gold and silver, log on to goldcore.com, your precious metals experts.